3 weeks ago, I made a video showing you how you can scale to $1 million in funding fast. That video is currently sitting at around 50,000 views at the time of this recording, and it climbed quickly to be my most popular video. And this video is part 2 of that. I'm going to be showing you what I learned coaching traders who scaled to 7 figures fast and lost it just as quick. I'm going to be showing you 4 reasons why traders scale fast and then why they lose it. I'm going to show you exactly what to do to avoid that trap. Now, if you haven't already seen part 1, the exact step-by-step game plan from going from $1,000 funded accounts to $1 million in funding, make sure you go and watch that first. Now, the first thing I get every single trader that's been through my mentorship program or in one-on-one coaching with me, whether they get access to $1 million in funding, whether they finally scaled to $1 million in funding, or whether they've come onto a lot of money through an inheritance or winning the lottery or whatever it may be, I get them to get a piece of paper and pen out and rule a line down that middle of that piece of paper. And on the right side, I get them to write down exactly how much in funding they've received. Let's say for this example, I get them to write down $1 million on the right side of that page. Then on the left side of that page, I get them to go in there and write down every single piece of work they've done that they haven't been paid for in the past. The hours of backtesting, the hours of learning and studying and watching videos and doing research and trading to develop a trading plan, the painful losses they've experienced, the social repercussions and the loss of friends because they don't have time for their friends anymore, the consequences to their health and their stress and the aging from trading, the consequences to their family and the challenges they've had in their family because they're a trader. I get them to write down every single piece of work they've put in that they haven't been paid for, and also all the challenges and consequences they've experienced along the journey of them getting to that $1 million in funding. And I get them to write all of those things down on the left side of the piece of paper. And then I get them to go in there and ask them a simple question. How much is your hourly rate? And then let's say, for example, they have 50 hours of back testing in there that they haven't been paid for, they haven't accounted for. I get them to multiply that 50 hours by their hourly rate to quantify how much that's worth to them. And I get them to quantify each of the things on the left with a dollar figure. And I get them to write down how much each of those things were worth in a specific dollar figure on the left side of that piece of paper. And if, for example, it's a loss of friend and they may say that's priceless, I still get them to write down the biggest figure they can be certain in. And that grips them and holds weight on them. Because what I want to show them is that they didn't actually gain anything. The funding they have right now, that $1 million of funding they have right now, is a compensation for all the work and sacrifice they've put in the past that they haven't been remunerated for just yet. And all that's happening is they're receiving that in that set of funding. And in the moment they balance the left side of the sheet and the right side of the sheet, and they see that they've put in $1 million of work and sacrifice on the left that they perceive to not being paid for in the past, and that's just transforming into the $1 million of funding they have now. And guess what? All of a sudden, in that moment when they see that and they balance the left and the right, and I keep holding them accountable until they balance it, they realize that they're worthy of that funding. And they've got it. There's no reason to feel guilty. There's no reason for them to feel like they've gained something that they don't feel worthy of. But the moment they see the sacrifice and the work and the compensation to the funding now, they feel worthy of it. They feel resonant on that level. So many traders easy come, easy go with funding, because the moment they get funding, they don't feel worthy of it. They feel below it. They feel minimized relative to it, and then they blow it. So without a doubt, that's the first exercise I'm going to get you to do. But there are also 4 additional reasons why traders continue to lose funding. The first one being is this invisible driver. And what happens the moment you get funding is you increase the greeds. If you're trading a $10,000 account, let's say, for example, you're risking 1% of that total account. So you're risking $100 per trade. That means each win could be $300, for example, if they have a 3-to-1 reward to risk. Now, $300 quantified in their mind may be able to help them pay for a dinner, for example, and it's a nice amount of money to have. But compared to now trading $1 million, risking $10,000 per position, 1% risk, and potentially having a $30,000 profit. A $30,000 profit can buy you a car. It can help you pay off your mortgage. If you quantify that profit and you put it in context, it can bring you a lot more. So the moment you scale to $1 million fast, your greeds will increase because now you're associating the profit to all the things you can gain as a result. And you create greater expectations, you create greater greed, you create greater perceived benefit from the profit of trading that money. And guess what happens? When the greeds increase, simultaneously the fears increase, because now you fear missing out on those greeds and you fear the loss of those greeds. You fear the opposite. If winning an individual trade is very profitable and it's going to give you all these things you think in your mind, then guess what? Taking an inevitable loss based on your sample space is very painful. It's very costly. You're going to lose in your mind, you think, a lot of things, a lot of opportunities. So the invisible driver that leads traders to scaling fast and then losing it all is the increase in greeds, therefore the increase in fear, and therefore the deviation from their proven mechanical trading plan. These traders haven't managed their psychology, they haven't mastered their psychology, and as a result, because of the greater amounts of potential profit, there's an increase in greed, increase in fear. The traders now run by fear and greed like strings pulling them away from their trading plan. They get greedy, they see a potential opportunity that they think is going to bring them all this profit, and then because of that, they're impulsive to get into the market without listening to their trading plan. Or now they have a greater fear and then they're now scared when the opportunity presents themselves in alignment with their trading plan. The fear stops them from taking that trade. They're pulled by the strings of fear and greed as opposed to sticking to their trading plan. So what you need to do when you scale quick is you have to have a greater importance of managing your psychology. The best place to start is my free Bulletproof Your Trading Mindset Tool 2.0. This is the most profound trading psychology tool on YouTube, being made completely free and available to you right now to help you manage your greeds, manage your fears, and stick to your trading plan. That tool is going to help you stick to your trading plan no matter what amount of capital you're trading, and it's completely free. So if you don't already have that, download it in the link in the description. Now, once you've managed this invisible driver by managing your mindset, your greeds, your fears through the Bulletproof Your Mindset tool, the next thing is you need to implement a defense system. I've mentioned many times in this YouTube channel that I've had clients and students who've built up and scaled up to $1 million in a few months, and then they've lost it all the next day. They've overtraded, they've taken trades not part of their plan, they've over-risked, and they've hit max drawdown buffer, and they've lost all that capital, they've lost all that funding. So you need a defense system, and you need to prioritize risk management, meaning you're never risking more than 1% of your total account size on any given trade. That's number one. Number two, you must have a drawdown protocol in place that the closer you get to your max drawdown, negative 10% for example, you scale down your risk so that you can protect your psychology so that you can stick to your trading plan. For example, between break even and -5, you may risk 1%. Then when you go between -5 and -7.5 in drawdown, you might half that and risk 0.5% of your total account. And then between -7.5 and -10, you may half that again and risk 0.25% of your total account size on individual trades. So when you're going deeper into drawdown, you're scaling your risk to protect your psychology so that you can stick to your trading plan. It may statistically not make sense, but I've seen more traders blow their accounts out of greed and revenge trading and overtrading than I have seen successful traders. So I need to encourage traders to be more risk averse, especially at these large amounts of capital, and prioritize a defense system. Prioritize capital preservation. Reason 3 is because a lot of traders don't have stability and diversification in mind. Even with the biggest prop firms out there, nobody knows what legal problems they're facing or what legal repercussions are going to be. Nobody knows longevity of prop firms in general. So you need to diversify. I had a student who had max allocation at my Forex funds, and that's all they had. And guess what? When they went under, this big and reputable firm, when they went under, they lost everything. They lost all the capital they had access to. So you need to diversify. When you're scaling on the way to $1 million, you need to have 3 different prop firms that you're using, all in different regulatory environments. Then use your payouts to build personal accounts. You can get out of the prop firm environment totally. And you can have accounts outside of that. Still trade your prop firms, but have accounts outside of that. And then use both your prop firms and your personal accounts to build a track record over a year so that you can go off and leverage other people's money through private investment, all that type of stuff, to have even greater diversification. But when you diversify, you stabilize yourself and you give yourself more longevity, and you have a strategy in place to protect your golden goose, the most important thing, your capital. And then reason 4 why traders scale fast and then lose it all is because of this so-called sabotage loop. But really what it is traders have a small perspective. They're only thinking about getting to 7 figures. That's it. There's nothing further in their mind. So when they get there, they lose all motivation and discipline to do the things that got them there in the first place. They have nothing beyond that in their mind, so they no longer have motivation to show up and do the action steps that got them profitable in the first place. So make sure you continue to expand your vision beyond 7 figures. Set the next goal to get 6 figures in payouts, and then build personal accounts. And then the next thing after that to get private investment and to build a year track record, a 2-year track record. And then beyond that, look into hedge funds and greater institutional money. So you continue to have a greater vision beyond your trading so you never get complacent. You never fall victim to the self-licensing effect. Okay, traders, if you found this useful, make sure you watch the next video that's going to pop up on your screen. This is going to completely transform your trading psychology to ensure you remove negative emotions, you can scale without issues, you can stick to your trading plan, and so that you can get consistent payouts from your trading. And traders, make sure you subscribe and stay tuned for part 3 of this series, where I'm just going to continue to offer you golden insights based on my 9 years of experience and the experience of my clients and students also.